the Wall Street was up to last night. And Sneh, let's start with this bet.
Well, absolutely. Lots is happening when it comes to tariffs, and we are not surprised because that tariff tirade still continues to exist. And hi there, good morning. It's not only the tariff tirade that is there, it's the hangover of the uncertainty that comes with it. Because if you see, while our markets were off yesterday, the US markets were up in a buzz, or should I say down in a buzz, because that's the mood when it comes to the US market. And let's understand what has happened in Wall Street yesterday. Stock futures, if we address that and talk about that first, they have fallen largely this morning, and it's not looking very good for the US market right now, and it's looking rather bleak. Let's take a look at what has happened on the back of this entire trade war that's happened between US and China. Now, what we understand is that a White House official has confirmed that now the current rate of the tariff that US has applied on China is 145%. On the back of that, stock futures fell last night as investors look to close out a volatile week punctuated by sharp swings for the major averages. Tariff fears, of course, remain at the forefront of investors' minds after President Donald Trump temporarily slashed his country-specific duties to a universal rate of 10% except for China. So that pressure and that overhang still continues to be there. Goods from Beijing will see a rate of 145%, like I just told you. And on the back of this uncertainty, yesterday the S&P 500 fell almost 3.5%, while the 30 stock Dow tumbled more than 1,000 points, or 2.5%. You had Nasdaq also that ended the day lower by 4.3%, so that was the big loser yesterday. And Thursday's declines wiped a chunk of the gains the major averages saw on Wednesday after Trump announced a 90-day reprieve on some of his high reciprocal tariffs. Because remember, on Wednesday, the S&P 500 surged 9.5% for its third largest gain in a single day since World War II. So that's a huge jump coming in. So some would say that this was a correction that was waiting to happen on the back of a huge rally that the market has seen on Wednesday. It could be profit booking, but it was also a lot of it came from the tariff overhang that continues between US and China, while the rest of the world has been given a 90-day pause or a 90-day break from Trump's tariffs. Let's understand what the implication of this is, because stocks resumed their losing ways yesterday as traders went into risk-off mode with trade policy uncertainty weighing on sentiment. Despite the tumult this week, the three major averages are on pace for solid gains over the course of the period. The S&P 500 is on pace for a 3.8% advance for the week, its best weekly performance since November. Nasdaq is on track to gain 5.1% for the week. Dow is on pace to jump 3.3% jump week to date as well. So over the course of this tariff dilemma, or rather the tariff up and down that the market has seen because of that, still on a weekly basis, all three indices stand to gain. So at least that is looking good for Wall Street. Another thing that happened while we were away and Wall Street was working is the CPI numbers and the job expectations numbers. The jobless claims were in line with expectations. CPI has come in 20 bips below expectations. So that is also something that has done very well for Wall Street. But well, yes, amid all of this volatility, let's see what holds for Wall Street today and how that pans our market open this morning. But Shreyanshi, let's talk about commodities as well, because lots has been happening with crude too.
Well, absolutely lots just about sums it up, right? Because you've seen a little bit of a roller coaster week coming in as far as crude oil prices are concerned. Currently, when you take a look at the moves yesterday, crude oil futures fell more than 3%, and that was after President Donald Trump's steep tariffs coming in on China that overshadowed his 90-day pause on higher rates for most other countries. Now, when you take a look at price levels, then US crude oil fell just about $2 thereabout. 3.5% closed around those $60 per barrel levels, and the global benchmark Brent as well lost 3.5% thereabout, settled around those $63 per barrel levels as well. But Trump's decision to increase tariffs on China, the world's second largest economy and the biggest crude importer, was to an eye-watering 145%. That is something that weighed on the market. And that is largely the kind of picture that we have as far as crude is concerned. Other than that, in terms of the factors, you do have OPEC Plus also agreeing to accelerate output increases, and that's also something that we've been looking at very closely this entire week in terms of factors as far as crude is concerned. But moving on, let's take a look at gold prices, because on the flip side, you do have gold that jumped nearly 3% to end at around that all-time high, in fact, coming in for gold, as well as a drop in the dollar, as well as an escalated trade war between the US and China drove investors towards the safe haven allure of the precious metal. So spot gold climbed nearly 2.5%, $3,000 per ounce plus levels is something that you're looking at as far as bullion is concerned, after hitting that all-time record high earlier in the session. So that's largely the kind of picture that you have for gold, other than safe haven demand, you do have central bank buying. But that's really taken a backseat because you do have safe haven demand that has been in the spotlight as far as gold is concerned. Other than that, of course, you do have the dollar index extending losses to a 6-month low. So lots to look at this week, and it's been quite the roller coaster week, Sneh.
Well, absolutely, a lot is happening, but